Hey everyone, this is Dimitri Pragmatic with MarketChameleon.com. I had a couple people ask me questions about open interest, and the last one was specifically on this long buildup. So I'm going to go through an example here of what this means in terms of open interest, and I'm going to use Microsoft here as an example. And I went over here. This is an open interest table, and over here we see what the current open interest is, the change from the previous day, and the percentage change, the volume on the previous day, and also what did the implied volatility do. And we're going to use these in combinations to understand what this long buildup is. And then I'll kind of describe to you how traders use it, because I think that's where some of the confusion came in. Now, when we're talking about options, first let's just take the buildup side of it. And when we talk about options, open interest really just starts at zero. It's not like outstanding shares in a company. So as soon as an option's listed, if nobody trades it, there's zero open interest. As soon as there's a transaction in it, somebody buys an option, sells an option, then that creates open interest. So whenever there's risk taken on in that position, it creates an open interest. And if there's more trades that are adding to risk, the open interest will start to increase until they close it out or the options expire. So that's why we say if the open interest is increasing, then risk positions are building up, or positions are building up on that specific option. And then let's take a look from the long side. So what does long mean? And one thing to keep in mind when we're talking about options are priced in terms of implied volatility or premium. So when there's a demand for options and more people are buying options than selling options in general, and premiums are moving up, then an implied volatility is moving up, we consider it that the buildup is more from the long side than the short side. More buyers of premium than sellers. So when we talk about long buildups, it's buildups in position and the premiums are increasing, and that the assumption is that people are building up from the long side. So that's what this long buildup in open interest is. And then the question came up, well, how do I interpret it? Because I think sometimes there's a tendency to try to interpret it in which way is the direction of the stock going. And that's not what this is about. This is only talking about what happened in the open interest, how it changed from one day to the next. So then the question came, well, then what if it's not telling me the direction of the stock, right? Then what would I use this for? And one thing to keep in mind is that options traders themselves, most traders who are already intermediate or advanced, they look at options from an implied volatility standpoint, not necessarily direction, but they look at it in terms of premium, and you could create any types of strategies around options. It doesn't necessarily have to be even directional. Now, when you're looking at open interest, some of this could be useful information depending what you're trying to do. So when you're an options trader, sometimes you're thinking kind of like a chess player. So if this happens, what do I think is likely next going to happen, or what are the next 2 or 3 moves? So I'll give you an example. Let's say, and I'll just put a few examples out there just to give you an idea. So if I go in there and I see a very big long buildup, let's say in this option over here, the open interest increased and the implied volatility increased, and I know that earnings were yesterday and earnings today, they released earnings, the earnings are out. So now I know the stock maybe didn't move that much, not as much as everybody thought, and now I know that the next thing I anticipate is that implied volatilities are going to come in. And now I could see, well, how much options were built up in that one option, because then I could anticipate, well, there's a lot to go, right? Because then you have people who were speculating, buying that option, and now they want to close out of it. It didn't work out, and the anticipation is implied vol is going to come in. So you might, or a trader might look at, well, if the implied volatility if you're expecting it to say go from 50 to 30 and it opens up maybe at 40 and you think there's still volatility to go, and you know that there's a big inventory of options there, that could weigh in on your decision, maybe to even go one way or the other depending on which way you think the implied volatility is going to go. But if you think volatility is coming in and there's a lot of open interest and a lot of buildup there, so that's one line to look at. Another way to look at it is, let's say a stock is going down, right? And you're looking at the open interest and you see a lot of buildup in out of the money puts, let's say. So they've been building up, open interest has been increasing, there's a lot of open interest, implied volatility has been increasing. Well, that kind of is an inflection point, right? So maybe if implied volatility, and I'm going to go reverse, hasn't increased yet, and you know that if that stock is going to continue going down, it could accelerate, and those people who are short options, short gamma, some of them might be forced to cover, so that could give you an indication like where those strikes are, where those options are, and help you make your decision based on taking not only other factors in place, but open interest is just one piece of information that you gather to strategize what you would like to do in the present circumstances. So hopefully this is helpful. There are other things, there's probably an unlimited types of things you could look at. Some people look for dividend spreads. If you're doing buy rights and you want to buy the stock to receive the dividend and sell the call, you might want to look at places where there's a lot of open interest, because then it might be your chances of potentially not getting assigned on it, somebody forgets to exercise, is a little bit better. So some people use it for that. And of course, these are a few examples, but I just wanted to kind of clear up a long build up in open interest. Hopefully this was helpful. See you guys in the next video. Bye.